Okay, so let's have a look at the last adjustment for Ryan Limited for manufacturing account 2016. We're going to break this up into 3 videos. It says provision shall be made for the following. So the first video will be on investing income due. Second video will be on debenture interest due, and the third one then will be creating a provision for bad debts. So the first one then, investing income due, will look something like this. We'll have a look at the trial balance and look for investing income. So we've got investments here, so 4%. So you've got 315,000. That's our investment that we've invested, 315,000. We get interest of 4%, and we purchased them on the 1st to the 5th. So you've got 5th, 6th, 7th, 8th, 9th, 10th, 11th, 12th. So you got 8 months. You got 8 12ths. So it's 315,000 multiplied by 4% multiplied by 8 12ths. So the amount that goes into our profit and loss account, where we add on to our operating income, the yearly amount is 315,000. Multiply that by 4%, multiply that by 8 for how long we have it, and divide it by 12. So 8,400, that's what needs to be added on to our operating income. Because we're calculating investing income due, we're just going to have a quick scan of the trial balance to see if you received any investment income. So as we scan down, I don't see any there. So if there's none there, then that 8,400 will also go into your balance sheet as a current asset. If there was investment income here, we need to take that away from the 8,400 because that's how much we received. And that figure then will go into your current assets in your balance sheet. So this 8,400 is the yearly investment we're supposed to receive. That goes into add operating income. And because we haven't received any investments, then that's the total amount that's due to be received. And that's the first part of adjustment 9, which your investment income due.